Hey traders, Jason here from Leavitt Brothers. Today I'm going to talk about trading gaps. Okay, we've all looked at a chart and gotten kind of excited about it, and then the stock gaps up, leaving you wondering, what the heck are you supposed to do? Should you chase it higher? But there are instances where the stock gaps up and then gives it all back. But there are also instances where the stock gaps up and runs, and you could have made a lot of money. So what do? Do you chase it? Do you let it go and focus your attention somewhere else? This is what I'm going to talk about today. This is how I deal with stocks that gap. These are stocks that I like, that I'm looking to play, and then out of nowhere it gaps, and I'm sitting there wondering what to do. This is how I play them. Okay, so here's an example. Here's Hain. Okay, weakish stock, was trending down but formed a nice base. You can call this a double bottom. Moved back up, resistance at 18.5. I was looking for it to establish itself above its 50-day moving average here, thinking I could probably get an entry somewhere in here in the mid to high 17s, and then if the stock breaks out, I'd get a couple points out of that trade. And then this happened. Boom. Stock gaps up and runs up. So what do? Do you chase it? Okay, I didn't really want to chase it because this is it's a slow-moving stock, and I don't want to chase a stock 10%, because this is the stock doesn't move 10% in a month, let alone in a day. Do I just cross off my list and look elsewhere? So this is what I do. I zoom in with a 60-minute chart or some other intraday chart. Most of the time I start with 60, and I look for some sort of moving average to be in sync with the stock. Okay, so I'm going to focus in on this area here. So I zoom in with the 60, and I notice that the 21 EMA on the 60-minute chart is respecting the price action. Okay, so and you can also see here we got some support at 19 from 1, 2, 3 candles, 4 candles, 5 candles. Okay, so you got support here, and then the 21 starts moving up. So there's my entry. Okay, I'm not going to panic and buy it here when it gaps up, but I'm going to wait a day, 2, 3, maybe 4 for the stock to go up, come back down, touch a key moving average, or move sideways and meet up with a key moving average, and then I'll play it. Okay, and then this is what happened. Okay, so the entry was over here as it bounced off the 21, and you see we got a nice move from like 19 up to 22. Stock's doing well even today. Okay, so again, I'm not panicking and buying the gap up. I'm going to wait a few days for the stock to either move up and then come back down and touch a moving average, or I'm going to wait for the stock to move sideways and touch a moving average. That'll give me frame of reference. That'll give me a stop. It'll give me an entry. It'll give me a relatively safe trade as opposed to just chasing the breakout. All right, let's look at another example. Here is JNUG. Okay, this is a stock that we played a few times over the last few months. Our last play was right over here when it broke out over 11. It was kind of getting squeezed by converging trend lines. The 21 had come up to cup the stock. This is one that we played at Leavitt Brothers. You can see it very quickly went from 11 up into the 13s, gave it all back, but on a short-term basis, it gave us a really nice trade. Pulled back a bunch. I was not looking to buy this dip, but it was on my list as a stock that I wanted to buy eventually. I was thinking maybe it moved sideways a little bit, maybe it came up and came back down and gave me some sort of frame of reference, but it was on my list. I was watching it. Then this happened. Stock just out of nowhere gaps up on high volume. So again, what do? Do you chase it higher? Do you cross off your list and say, I missed it? Okay, this is what I do. I'm going to zoom in on this area here, and I'm going to look for an entry with an intraday chart. So I zoom in, and what I see here is the 50 comes down, the blue line is the 50, it supports the stock, and the 21 EMA, okay, which had respected the stock many times throughout its path over the previous couple months, okay, you can see them way down here, was coming up here and supporting the stock. Okay, so again, and so that's my entry. So again, I'm not going to just panic and buy the gap up. Stock pushed higher, came back down, met a key moving average that I was looking at closely, gave me an entry, also gave me a stop here below 9.8. So that's how I would play it. Okay, don't chase it, but wait a few days, you get another entry. Oftentimes that entry is at a higher level, but it's at a higher level with much higher odds of success. This happened afterwards. Excuse me. So you can see it just moved from 10 to 11, which is perfectly fine with me. Okay, if I can get a move from 10 to 11 twice a week, I'm happy. Okay, I don't need to make a killing, but if I can get really good at just buying 10, selling at 11 a couple times a week with a little bit of size, you can make a good living doing that. All right, let's move on to the next one. All right, PYX. Okay, nice base here, broke out on strong volume. You can see down here the volume. Okay, didn't go very far, settled into another little consolidation pattern. The 8 EMA was coming up and pressing against the stock. This was another one that was on our list. We had resistance at 18. It broke out, but it didn't follow through. It was still on our list. Some Leavitt Brothers subscribers were in, some were not in quite yet. So it was one that we were either in or we wanted to play. Then this happened. Stock gaps up, goes up more than 30% in one day. So what do? Chase it? That's risky. Okay, it could work. It could also just go right in your face, or you can wait a few days, zoom in on an intraday chart, see what is offered. So this is what happens. So I'm going to zoom in this area here. These trend lines are going to stay in place. Okay, so what happened is after the stock, this was the gap up. Okay, so what happened is the stock pushed higher, then it moved sideways. It moved sideways for long enough for the 21 EMA to come up, catch up to it. Okay, so there's your entry. Notice you have some, notice you have some support here down at 21. You have 1 candle, 2 candle, 3 candle, 4 candles that all came down to the low 21s and attracted buyers. The 21 EMA comes up to cup it. So there's your entry. And then this happens. So your entry was going to be in here. Okay, so if you chase the gap up, obviously you're happy because you got in at a better price, but you don't know. I mean, the stock could gap up and it could just roll over and just crap out. So let it go, wait a couple days, see if it goes up and comes back down, see if it moves sideways and gets scooped up by a key moving average. In this case, it gets scooped up by the 21. So your entry is somewhere in like the 21, 22 area, and then you could ride it up to the high 20s. Okay, volatile stock, obviously lots of intraday movement, not easy to not easy in your stomach if you're watching it closely, but still, this is how I would deal with it. Okay, it's a stock. It was a strong stock coming out of a base. I really wanted to play it. It gaps up. Instead of quitting and moving on, give it a few days, wait for it to settle down, wait for a moving average to catch up, and then you could play it again. Okay. I'd almost rather play it at a later date at a higher level when the odds of success are higher than take a chance on playing at the day that it moves. Okay, here's one more example. They don't always work. Okay, just because a stock gaps up doesn't mean it's going to pause for a couple days and then continue on. Here's a stock, Stone Co, that we profiled back here. We were playing it off when it's getting cupped by its 50 here. Ran up from the low 20s to the low 30s, pulled back hard, and then bounced off of its 21 EMA. So again, looking to play it here, not sure what it's going to offer us, but it was on our list. Next day, gaps up. So what do? Do you chase it, or do you quit and say, I missed it, I'll go trade something else? So let's zoom in, and so if I'm going to zoom into this area and see what's going on, this is what happened. So it gapped up. Okay, here's the gap up. Okay, and what happened is it has moved sideways. You can see that it's traded it over here. It bounced off the 50 and the 21. Okay, so you could have gotten an entry there. Okay, if you got an entry there, then I would be out today, because today it's not really doing that well. The market's doing well, but the stock is not doing well. So this is a good example of a stock that if you don't chase it, wait a day, it moves sideways, some key moving averages come up and cup it. If you bought it yesterday, then you're out today with a scratch trade, or maybe you lost a little bit. I don't know. Okay, but as far as I'm concerned, the trade is over when it doesn't respect the moving averages. Okay, so this is an example of a stock that didn't work. Okay, a lot of them work, some of them don't. Put a stop in place, manage it. Hey, if you could make, if you could do this and nail a move from 21 to 27, just make sure you don't let a loss get out of hand, because if you can nail a good one once in a while, that'll more than pay for a couple losses. Okay, Hope you got something out of this. Thanks for listening. If you liked the video and want me to do more, give it a like, share it with your trading friends. You can also subscribe to the channel right here at YouTube and be alerted of new content when it's posted. Come check us out at Leavitt Brothers. If you're not getting the results you want, change something. Okay, change the types of trades you do, change how you do your research, where you get your ideas from. Try different things until you find something that works. Okay, check us out at Leavitt Brothers. Perhaps we can be the key ingredient that gets you over the top. Okay, again, thanks for listening, and I'll see you next time.